A few weeks ago, I talked about Byju's, their EMI loan crisis, and how close they were to running out of liquidity. And this week, I want to talk about the exact opposite situation with Unacademy. So Gaurav Munjal shared this with employees on Slack, saying that they have upwards of 2,100 crore rupees in the bank, and that by the end of April, they'll almost be profitable. They have seen a major improvement in their EBITDA and will achieve 26% growth this year at the group level. Now, if we take a look at the verticals that are bringing in revenue for Unacademy, we can see here that online test prep is the highest generator of revenue with an estimated 620 crore rupee ARR in 2023 compared to 732 crore rupees generated in 2022. But I think the actual winner here is Unacademy's offline business, their physical centers, which generated 53 crore rupees in all of 2022, but are on track to generate 400 crore rupees in 2023. And I think Sajid in the replies on Twitter asked an interesting question. Will they sustain growth hinging the business on offline centers? And the answer here, in my opinion, is yes and also no. See, Unacademy is still losing money. They are close to profitability. They are decreasing their expenses, but as you can see here, in the calendar year of 2023, their offline centers are still projected to burn about 150 crore rupees, the biggest loss maker of the entire company. However, this is strategic burn. These offline centers are super capex heavy, but in the long term, they're actually going to end up being one of the biggest contributors to Unacademy's future stability and profits, as they only need to be built once and will pay dividends for many, many years to come. So it looks like by the end of this calendar year, Unacademy is going to have about 116 months of runway. That's almost 10 years. And honestly, that's the kind of runway that you need to survive in the long term in the education space, which is why the next thing that Gaurav said really resonated. He said that we'll be the largest edtech company soon. We're going to be the last ones standing. A few rough patches here and there won't stop us. And with Byju's running around trying to scrape together external funding to pay off their debts and also sustain their massive burn, 116 months of runway and also future group level profitability are definitely steps towards being the last one standing here. But there is one thing that's not coming into any of these charts that were shared on Slack, and that's all of the layoffs that Unacademy has done. According to INC42's layoff tracker, Unacademy has laid off the third highest number of employees, 2,040, or 25% of their workforce, which puts them in third place behind only Ola and Byju's, and they've done these layoffs to cut costs and move towards profitability. Now, I don't know how many of you guys remember in news video 152, I talked about how Unacademy was one of the biggest loss-making unicorns in India in FY22. NTracker did that unicorn report, and take a look, they were at number 6. So the fact that they've been able to go from that in FY22 to nearly profitable at the end of FY23 and now actually probably achieving it in the next couple of months is extremely impressive. All right, next up, just a quick update. We're hiring video editors here at Backstage with Millionaires. Now, this is a full-time paid position. We're paying at or above market rate. It depends on your skill level, but you do need to be skilled. You need to have experience in video editing, specifically with Adobe After Effects and Adobe Premiere. And we're not really looking for people who are in college right now, unfortunately, or even people who are freshers. We want people who do have professional experience. Also, this is an in-person position. It's not work from home or work remote, so you do need to be based in Bengaluru. We want people who can be a part of our story, a part of our culture as a company. So if that's you and you're based in the city, then click on the link in the description down below and you can share some of your work with us. And if it's not you, then share this with some of your friends. All right, next up, I want to zoom out a little bit and talk about infrastructure, and specifically ONDC and UPI. And I know that this isn't really startup related, but hear me out. Firstly, there was this interesting ONDC memo from India's Commerce and Industry Minister where he basically said, you're doing it wrong. So basically, Piyush Goyal, and this is the TLDR version, said that companies should register their main platforms on ONDC instead of building a separate app. And I couldn't help but assume here that he's talking about one particular company, and that of course is PinCode by PhonePe, which we talked about in news video 151 if you're not up to date with that. But he didn't stop there. He went on to say the following.
The other day he was talking about a company which has created a ONDC specific platform.
And he's obviously talking about PhonePe's PIN code here if we read between the lines.
That is exactly what we don't want to happen. We want the main platform to come on to ONDC. And maybe at some stage, Mr. Koshi, you could look at excluding all those who don't come up to a certain deadline onto ONDC. Because at some stage, we will also have to cut off those who remain left behind. And with the whole force of the government, I can tell you, We'll be encouraging people to transact more and more through those companies which are on ONDC.
So there you have it. It looks like the government of India is planning on leaving traditional e-commerce behind, and they're saying that the businesses that don't fully move their e-commerce onto ONDC will eventually regret it. And I honestly kind of believe him, because we've seen the same exact thing happen with other government of India infrastructure, like, for example, UPI, where Paytm, for the longest time, they just wanted to keep playing their little digital wallet game while everybody else was moving onto UPI. And so they ended up in a position where they were the only ones who weren't on UPI, and everybody else was paying for things with PhonePe and Google Pay, and then Paytm sort of did get left behind there before they eventually offered UPI on their platform too. Now, speaking of UPI, something big has happened with NIPL, that's NPCI International Payments Limited. They've partnered with PPRO, and both of these companies have terrible names, by the way. Now, if you've never heard of PPRO, I don't blame you. I hadn't either before researching them, but they're actually a pretty big deal. So this is a London-based B2B digital payments infrastructure provider. And just real quick, I'm going to break down how their business works. So on one side, you have their core customer, the business, and this business wants to accept as many payment options as possible to maximize their revenue. And so they tie up with PPRO. And basically, this unlocks all of these partner payment options, like, for example, Stripe or PayPal or Alipay, and now also UPI. And the amazing thing here is that this is completely global in scope. So by integrating UPI into their existing digital payments network, they are unlocking UPI as a mode of payment for anybody who uses PPRO. Now, do keep in mind here that this doesn't mean that UPI is about to become something like a PayPal or a Stripe that has international customers. This is purely intended for people who are Indian or who have Indian bank accounts. So mainly NRIs basically are going to be using this, but I still think it's a cool way for UPI to go global. All right, next up, do you remember that Blinkit delivery driver strike? Well, not surprisingly, a lot of those drivers actually left Blinkit for good. And I guess that's just what happens when you slash your delivery drivers' fixed incentives. But apparently, Blinkit had upwards of 3,000 delivery partners in NCR, and they're now closer to 2,000 as 1,000 drivers quit and moved to companies like Instamart, Zepto, BB Now, and Dunzo. All right, next up, let's jump into some funding news real quick. $58.38 million were raised across India's entire startup ecosystem this week, which is not a bad week, especially not compared to last week. And you can see this number in context with the last couple of weeks that have happened in this financial year, the financial year of 2023. And by the way, you can find links to this chart as well as everything else we'll be talking about in the funding news segment today in the description down below. So the leader this week was Local, and as the name suggests, this is a hyper-local content platform. They're based in Bengaluru. They raised $15 million in their Series B round. Then we also have Servify, and they raised $5.7 million. This is a customer device ownership company, so you can sell your phone to them and then upgrade to a new phone or get device insurance or device protection. And what I love about these guys is that they're an Indian startup thinking globally, because device ownership is a global phenomenon. You can see here that these are the countries that they have a presence in. And then also we have Inspect City, or maybe it's Inspecity, I'm not exactly sure how to say it, but Pankaj covered these guys in a recent short. They raised $1.5 million to literally build cities in space, so A+ to these guys for thinking outside of the box. This is incredible, although the top comment on that short was, that's a great startup pitch, just requires some $100 trillion as funding. Now, I don't know about hundreds of trillions of dollars, but I do understand what Abhishek is saying. A lot more money is going to be required for these guys to actually be successful, but keep in mind that this is a pre-seed round. This is the round that you raise before your first round. So it's kind of a very early stage bet that these investors are placing on these guys, and I think we need to encourage them. As a foreigner living in India, and I'm just going to say this bluntly here, I think that Indians are way too pessimistic and also critical of each other's ideas, where they say that that's never going to work, you should just give up and focus on something that's safer, more achievable. And you know why a lot of Indian startups don't end up going global and actually having a global impact? It's because of this thinking. What if Elon Musk thought that way, or Jeff Bezos, or even Steve Jobs? He literally came to India, and you know what he said? He said that the main thing I've learned in India is intuition. The people in India are pure rational thinkers. And he meant this as a compliment, obviously, but Steve Jobs was not a rational thinker. He went back to the United States after that trip and founded Apple, which was a completely irrational, against the grain, contrarian company. Apple went on to change the world, but this irrational mindset also killed him too. He rejected surgery for 9 months after he found out that he had cancer and chose to eat healthy food instead. So irrational thinking can be a double-edged sword. But if you're a young Indian person and you want to change the world, if you want to have a meaningful global impact, then stop thinking rationally. Ignore the crowds. They're going to talk all they want. Just focus on doing something important, not something safe or conventional. All right, thank you guys so much for watching, and I'll see you in the next one.